Very interesting day today with the earnings results, although some of us weren't surprised with at least the move in Meta. What's interesting to me about Meta, though, is it's a massive inside move. They were pricing in $48.35 on the snap and 50.37 into Friday's OPEX. We still might get that, but right now it's only down 22. So if you hesitated this morning and you were a premium buyer, that was not so good. Pretty nice bounce in the morning, but still fading in the afternoon. I'll be curious to see if that higher low gets taken, the 563 area that had been some prior support. Let me put this up here. So I think if you're short, I would just keep trailing down stops. I would normally say just use high of day at 589.90, but I think that's too much at this point. I'd say 579.59. Anything above there, I'd probably stop out. Below, though, to me is still vulnerable, maybe to still lower prices. I don't know, by the way, what was up with yesterday. The sound froze, and that was really not good. But I think it's better this time. If anyone has any sound issues or any technical difficulties, just put it in chat or DM it to me so I can correct it as it happens. And if you come in late, I do my best. It doesn't always save, but I save the broadcast and then post it to socials. Although I noticed yesterday it didn't have sound, which was after like the first few minutes, which was very weird. All right, moving right along. So usually what'll happen is you'll have Google and Meta, like I've said, report, and Google will go one way, Meta will go the other way, but we got the 723 gap fill in Google to 181.54, which was our target, and it's now pulling back. It looks like it may fill in the gap. Where would I buy Google? Probably up over a prior day's high once the one time framing to the downside, once the corrective auction ends. But this has been the theme, right? In a lot of these stocks that we see these pops with very little or no follow through. JP Morgan was an example of that as well. So my guess is the 100 MA would be the first big downside target here at 168.71. I'd probably get interested in buying the dip if they overshot it down to 164s, 165s, or waiting for it to clear a prior day's high. I don't love that today has a pretty wide range. I mean, I guess it's not too big, $5 and change, but I'd usually prefer if it was maybe $2 wide. That would be a little bit easier because then you could use your stop right below low of day. But yeah, I mean, this has been the case. I mean, JP Morgan also. Bulls have not been able to clear 225.48. And my big question is, are we just building more inventory up here near the highs so that the highs will be new support once it's cleared, or are traders getting in at bad prices and there's going to be a larger liquidation break and you're going to have all this inventory trapped at the highs, and you'll probably have the highs in for a while because you had so many days of consolidation up here? That's still to be determined, but for me, that's probably the bigger risk given the price action that we've seen. I think a lot is going to obviously hinge on if Microsoft and Meta have multi-days down or if it's sort of 1 or 2 day wonders. We've seen before on earnings that there can be multiple days down. I'm sort of thinking, and I had mentioned this, that I thought Microsoft was looking like it had a fairly bearish chart pattern, although we're generally bullish on the company of Microsoft. But I think it could be vulnerable maybe down to 400, particularly if we were to lose low of day. And now you've got a stacking of MAs above us spanning from, 420 all the way up to 428 with the 20, 200, 50 MA, 10 MA, 100. I mean, so all of those MAs, which should have acted as support, now may offer up some resistance there. Apple, I had warned that we saw that pinprick look above and fail at 237.23. We made 237.49, and we are below the 232.92. We did hold the 50 MA today, which is a little encouraging. I would have liked to have seen Apple down a little bit more today. I had mentioned in the, I mean, I know it's a little bit of wishful thinking, but I was hoping it was going to be, I don't know, like $10 today. But I think that there are two ways to play this. If you want to do it, maybe do a call spread or just an outright put spread playing for the 220s. But for me, I would rather be the second mouse here, given the fact that we have a look above and fail. So often I like to wait till the look above and fail fails. I know it's a little bit convoluted here, but I'd feel much better if they can clear and stay over not only the 237.23 now, but the 237.49, which is, of course, that topping tail reference high that we saw on 10:15. So for a couple of weeks, it's just been consolidating and pulling back. I do think that there will be some buy the dip action in Apple if it were to get down somewhere between 220 and 214. But if the iPhone is being perceived as not good or not selling well, that could be a damper for a while, because this is sort of when it should be shining, right? When it first comes out. I know that there was the concern about them cutting potential production and that the delivery delay wasn't as big as usual, but we had anticipated that, right? Because what was good news initially for Apple, that they were increasing their production, obviously to cut down on lag times from when the orders are placed to when they're shipped. Analysts are so accustomed to looking at that they didn't really factor that in. But initially, the fact that they had ordered 10% more iPhones took the stock higher, but then they were punished for it when the delivery dates weren't pushed out further. My guess is the phone is selling just fine. I know anecdotally some of the lower tier carriers like the Mint Mobiles, and not to disparage them or anything, but I mean, they're not Verizon or AT&T. And I know that they've been having problems getting the phone in there from, I've heard this from friends of mine who tried to buy the phone and they had to wait. So at least on the Pro models. I'm not so sure about the regular iPhone models, but the Pro models are definitely the phone of choice. Let's talk about the futures. So I had warned that if we weren't able to get up over and stay up over 5,900, we were going to likely see 5,800, and here we are even lower. We actually got down to the 9/18 Fed day high at 57.55.75, a little bit of bottoming tail action below there, but we are rallying. We did have now a pretty nasty underwater close from yesterday, but we had 2 days of overlapping value between 58.65 half and 58.67 quarter. So my guess is if we were to get back up there, it'd probably be some fairly rock solid resistance. Price was able to hold at some key levels initially today. They were like from the, we had a bottoming tail, around 5,800. But once that really got going to the downside, that was just the further liquidation break. We're currently 21 points below VWAP. That's not really that much. Usually for me, I get interested if we're like 50 points below VWAP, but I would imagine that'll be some resistance now. It comes up somewhere between 57.85 and probably that 5,800 now could be some resistance. Qs initially were able to hold that 20,263.75 to 20,381.75. They pushed up above it, but once it cracked, we came down. We're actually further away from the 918 Fed high at 19,900, and we're hovering around the 612 Fed day high at 20,105. It shows you just how little the market has moved in the last few months. I mean, there's been a lot of gyration, but ultimately price hasn't really traveled all of that far considering where we pulled back. I think it's sort of been this incremental move on the upside. SPY, oddly enough, didn't quite get the 50 MA today. I was kind of hoping we got it. We may get it, maybe we'll get it later or tomorrow. But I think between 568.45 and 565.16 is really the key here for a quote-unquote healthy pullback. Meta major supports, obviously the 50 MA. That was the after-hours low. If you're already in the puts, you might want to hedge a little bit because this is a massive inside move. They were expecting $48.35 and $50.37 total into the Friday expiration. So if it were me, what I would do, I don't know what puts you're in, but I would make them a spread. I'd probably sell the 527s or the 500s against it. December here in December. Yeah, so I would do that. I don't know what your upper strike is, but I would probably convert it into a spread. We're getting the bounce that we were looking for here. It's very minor, but I had left off on the last video on SPY, so we'll pick up where we left off there. I don't love that we didn't get the full articulation here down to the 50 MA. I always view these as sort of half-cock slingshots, but there's another way of viewing it, that there's so much demand for stock that they don't even wait for it to get down there. I'm sort of the opinion of the half-cock slingshot, just because I'm a jaded guy who's been trading for so many years. I know all the games, but when you're in a bullish tape, sometimes that does happen, so it is something to note. The 50 MA obviously at 568.45. The retest of the neckline could take you to the 716 high at 565.16, and I had posed that we could have a head and shoulders situation here, and that would be the neckline, the 565s. So I'm a little loath to mention this because it's a thing, so I have to. On 1023, we made a interim low, what I'm considering a fulcrum pivot low. It's usually the low between two highs. And in this instance, on 1023, we had that. We got the bounce, but the bounce was to a lower high, which was yesterday was the high. And now we've taken out that range low. So technically, the bulls would need to get back up over and stay up over the 574.42. I'm going to be a tougher grader and even just use high of day here at 575.63. If the bulls can do that, I think they fill the gap and probably continue higher. If not, I would think the 50 MA at the 568.45 and the retest of the 565.16 are likely on deck. If that fails, we do that whole fib to fib, MA to MA, we could be looking at something like 554s to 553s. So if you're going to do a spread, I would target somewhere around that 100 MA as a lower level. Usually the 50 MA holds for a little bit, and there's a bounce usually to the 20 MA. This has been our thing, right? If the 10 MA breaks, we go to the 20 MA. If the 20 MA breaks, we go to the 50 MA. So we're following the order of operations here so far well. I'm just seeing if I don't feel like I'm centered here. All right, now we go. I feel that I just feel like this is a liquidation break at this point, and I think we're so close to the end of the year that traders probably will be interested in buying the dip, but there has to first be that dip. Qs are a similar situation here. We are below the 78.6, though. We had talked about selling 500 in the last couple of videos, right? Because if you're on client calls, and I had said if you pull back into the 480s, and here we are, how do you get on calls with clients and say I didn't sell 500? And imagine what those calls would be like at the 470s and if we got down to the 460s. Trust me, I've unfortunately been on them. Very briefly, you guys know I worked for one of the big firms and didn't really like my boss, and there was a whole thing. But anyway, I've been on those client calls, and they're not fun. So short term here, I think bulls, I'm going to, again, be a really tough grader, and I'm going to say they need to get over the high of day at 492.43. Anything over 486.39 to me is, I guess, a little bit more neutral, and below there to me, bearish. And I would think the 50 MA at 481.65, 477.40, which was the 10-1 low, and maybe a full articulation down to the 473s, which would be the 61.8. So if we can't hold the 78.6, we go down to the 61.8. Now, if we do hold the 78.6, there is, and we are a little below it here, we have to see what the close is, it is very possible that we do wind up going back up into the 500s. We've seen this now multiple times where there's responsive selling, but there's not really a huge amount of initiative selling just yet. There could be. Responsive market, obviously, is when you respond to price. Initiative is when you trade through price. So far, we're responsive, and to me, this is really just a move down to the lower end of the range. I think a lot's going to hinge on Apple, and it's going to hinge on the earnings, Apple and Amazon, but mostly, I think, Apple. Amazon will probably be all right with AWS. Apple is going to, of course, hinge on the iPhone. And if they, if the 16 and the 16 Pro are selling well, I had mentioned earlier that I believe that they are, based on some anecdotal stories I've heard. I would have liked Apple down more for more of a shake and bake than we have here. I mean, this is sort of like a shake and bake light, but I need to see it really at least up over the 10 MA at 232.49 and to see the look above and fail over 237.49, because then I think there's a lot of room. It probably works its way on up to 260 if that can clear and hold. If not, not so good. And I'll be also curious, let me see what the Apple expected move is. They're looking at, it's a decent size, $8.73 into the expiration, $8.10-ish on the snap on earnings. So yeah, I guess that would take you down to those 220s like we had talked about, and on the upside, we could get close to those 237s again, so I would really need to see that clear. I was hoping, like I said, for a bit more of a plunge in Apple here, but the 50 MA roughly held on 10.7, so I guess the 50 MA here is the key MA, at least for the moment. With regard to Amazon, yesterday was a move up above the trend line, and today we're back below it, and we're back below the 78.6. So keep it simple. If you want to chase it in the after hours, let it clear the 190.60, and then you probably have a move up to 200. If we keep dumping, range low is closer to 180, down near the 200 MA, and possibly lower, but that to me would be the big downside target. And given the fact that we've had these inside moves in the RTH session, meaning regular trading hours, yes, at the after hours on Meta last night, we did get the 50 MA, which is where it should have, quote unquote, gone on a measured move. But now during the regular trading hours session, you only have a $23 move with a $48 expected move. So if you were in puts, you're probably getting creamed on that. You might not even be, I mean, you got the direction right, but you're not necessarily making lots of money on it. And for me, again, this would be the reason to use spreads, because when that IV contracts, the lower strike contracts as well, and that helps offset your Vega burn. Is Vega burn even a thing? I know theta burn is a thing. I don't know about, I guess Vega burn is a thing too, because the IV is contracting. So yeah, we've now created a new term, as we often do, but Vega burn is mitigated because of the lower strike. It's not 100% offset, but it is offset to some degree, and then also you have the time decay as well, so that helps with your time decay on the upper strike as well. Microsoft, let's re-examine that one. The expected move there was $18. We're a little over that here. So that, if you were in puts there, you're actually probably making some decent money. We were looking for a move down to 400. I still think that that's possible. I had mentioned that I saw a lot of stacked MAs above it. That could be resistance now, and the overall chart pattern isn't so great. NVIDIA is actually right on the trend line. I had said I thought 130.05 to 131.26 would be key support. On the upside now, let's wait till it gets over at least the 20 MA at 136.58. You could even wait for high of day here at 137.61, but if this were to keep dumping, you're probably looking at a move down to the 125s, maybe 121s in that zone, and then it probably would find some support. I don't know how long it would take to get down there, but that would be the green channel low. And of course, I'd be still more bullish back up over 140.75, or sorry, 76, because we've now seen multiple look above and fails there, so we would need to see the look above and fail. One of the things that's had me really cautious the last couple of weeks has been the underperformance of the SMH relative to the Qs, and the Qs largely weaker to SPY. Often when we're in a bull tape, you'll see the more risk on, meaning SMH leading Qs and Qs leading SPY, and it's been backward. I think a lot of that had to do also with interest rates coming down initially and people feeling that they could put money into other things other than the big cap tech names. And we are still seeing that to some degree, but I think the enthusiasm there may have dried up a little bit as interest rates have gone higher. And I had posed that the 10-year, if it were able to clear and stay over 4.25, and I'm just looking at my 10-year minis, 10/10Y, that's one way to get it up on toss. It is a little backing off here, but if it were to go to the downtrend, there is room up to 444 now. It had been 445 to, I think 445 to 450, so that area. I'd feel better with it back below, let's say 418 to 413, but it's still consolidating up here, and higher rates aren't so great for PE multiple premiums. TLT is bouncing here off of now a bit of a higher low. If you're long that, just use 92 as a stop. I'm actually good with putting on a put spread there. A call spread there. If you want to go longer dated, like let's say we went out to, I know it's a little bit long, but if we went out to January options and let's say you bought the 92s and you sold the 98s, you could put that on for 235. If you've got the Huevos Rancheros, you could sell the 188 puts to fund it. Or if you want to sell, let's say we did it at the neckline here. So let's say we bought 92s, we sold 98s, we sell 92s, we buy, how far do I want to go down? Let's say 87s. So you could put that on for a 76-cent debit. Hit confirm and send. The risk reward is a little iffy here. You have a max profit of $5.24, max loss of $5.76. I don't always love that risk reward ratio, but we also know that if it starts going against us, we could roll the upper strikes down, right? We don't need to always be at 98. We could bring that down to, let's say, 95, and that is actually where there's a lot of volume today. So you could bring in that kind of premium. Often that's how I start off, by the way, with my trades. I'll put on a larger call spread or a larger put spread. I try when IV is low, although now in 23s it's a little bit more elevated. Before, when it was 19 or 20, I wasn't as excited, and when it's in the 15s and 16s, I sometimes don't even do the puts, I just do the calls. Or if I do the put side, I do it smaller size. That's always a great way to mitigate risk, by the way. Smaller size and, of course, trade location. So, yeah, I'll often go for the larger spread in the beginning, and then if it doesn't work right away or if it goes against me, I'll often roll down the lower strike, bank that premium, lower the cost of my trade, and yeah, I limit my upside a little bit, but I've locked in some of the gain, and I've reduced my trade cost, which is very key. I love to reduce trade cost. If it doesn't work for me right away. If it does, then, I don't care. I just book the gains. You could also, if it's starting to work for you, roll up the put side as well. So if it goes against you, roll down the call side. If it's working with you, you could roll up the put side. Or buy still higher calls and make it some kind of a butterfly at that point. So yeah, I don't mind doing that TLT type of trade. I think it's going to take the Fed, though, on November 7th to really determine the direction here. It would not surprise me to see it plunge down to those 88s again. I don't think we're going to go much below there, and we are starting to see money flow making some higher highs here. That's one of the reasons why I'm a little bit more, I guess, I don't want to say complacent on TLT, but comfortable with the trade location here, and this would pose a bit of a higher low. Watching futures here, not really too much of a bounce. I'd be curious to see if it does rally, by the way. The 557.85, that had been an old reference high from 716, lines up really well with the VWAP. And now I have to think in the Qs, somewhere between 20,206 quarter to 20,263.75 could be some resistance now. And VWAP is there, and that was also the big of that start of that big zone we were watching as key support, which had been holding between 20,263.75 and 20,381.75. Once that broke, that's when you saw the liquidation break. Same thing with once you came down from 5,900 to 5,800 and that couldn't hold, we saw the next leg, lower here into the middle of the next strike. So everything today, to me, is the market mechanics working as they should. Any other questions here? We're going to wrap soon. Schwab, you want to talk about? I'm just looking at chat here. So you want to know resistance levels. Well, number one, I would use low of day as a stop at 70.48. You're into some resistance here. You feel, for me, the move already happened. You filled the 715 gap on... You had two topping tails on 10.15 and 10.16. So for me, that trade would be over. And if you lose the 20 MA at 69.71, it's probably a short. I would feel better on the money flow is starting to roll over with a lower high. I'd be real careful with that one here. I'd feel better over the lower high at 72.91. So I'm not sure how you're positioned in this, but if you want to do some kind of if you're in calls, maybe make it a spread and use a stop below that 20 MA. But for me, that move happened. I mean, it filled the gap on the gap. The earnings gap filled the last earnings gap. So it could take some time to play out here. And again, responsive market as opposed to initiative. All right, cool. All right, so what I'll do here is I'm going to combine the videos where it cut out earlier, and I'll post it to socials. If you want to just watch it here, you can just go in. It cut out. We caught it pretty quickly on the last one, so you could pick up right where that left off. I also encourage people to become super followers. Go on and click the subscribe. We post a lot of other videos there. I do my intra-week videos, and I post some proprietary tweets for followers. It's getting limited. I have like a few more